In this Forex trading education video, I'm going to talk about support and resistance. I have changed color scheme of the chart to black and white. You can do the same by right clicking on the chart, go to properties and change your color scheme. You can click on black and white, click OK. You can open the properties also by pressing F8 on your Windows keyboard. This color scheme is helpful because candle patterns in the past were taught in black and white color, and many candle patterns are named after black or white, which is why I'm using this color scheme. But I'm not talking about candlestick patterns today. I'm talking about natural support and resistance. So let's get started. So we are going to look at these things. For example, this is a high, this is another swing high, this is a swing high, this is a swing high. So these highs can now be considered as resistance. So if market returns back, there is a high chance that market can reverse before coming to this level, or it can go to this level and it can then come down. Just like last time what happened. See, this was the previous resistance area, market went there and it came down. So this is how resistance can be spotted directly on the naked chart. Similarly, these levels can be considered to be support. For example, last time this worked as the support. So it cannot be exactly linear, but yeah, there can be a little price range, maybe of 10 pips or 15 pips or something like that, and that particular area can be a support or resistance. So this is how you can find natural support and resistance on the chart. Now I'm going to talk about what happens when market returns. When market returns to the upside, previous support level starts working as a resistance level. For example, right now market is here. So this obviously is going to work as the resistance because it was a resistance earlier, but there can be another resistance which will appear before there. For example, if we look at these swing lows, previous swing low was this, and this is the recent swing low. If market returns right from here, this will become a new support, and this previous swing low becomes the resistance. So market may react right from here before going to the next resistance level. I'm trying to say in short that while market returns, previous low can become the resistance. Similarly, when market returns after a rise, previous high can become a support. For example, this was a previous high. From here market was reacting in this candle, then in 1, 2, 3 candles. So what happened when market was returning? Market started reacting from the same area. 1, 2, 3, 4, 5. 5 candles reacted from this area, and then finally market was pushed to the upside, and then when the market started coming down, it succeeded to break this at this attempt. In these 7-8 days, market couldn't break this support, which was the previous resistance. So these are the natural support and resistance based on swing lows and swing highs, and you can draw the lines to plot them on the chart. But they are, like I said, they're not going to be exactly linear. There can be a range of 10-20 pips, and you'll have to look at the price behavior in those ranges to figure out whether these resistance or support levels are working or not. All right, now let's go to look at other factors by which resistance and support can be drawn. So I will take you back to the chart where we can try to plot some trend line and channels. So let's go. So I already have plotted a channel here. You can plot channel either by clicking on this and then drag and drop on the chart. For example, if I click here, then I can drag and drop to the downside, and this channel will be plotted like this. So if you want to adjust the channel, here is how we adjust the channel. You double click on this line, then you will have 1, 2, 3 dot. You have to connect this dot here, this dot, to this level, and then you can drag this line. So this line will be parallel to previous line, so the channel will be drawn exactly parallel with two exactly parallel lines. So here is a case where we cannot draw a proper channel because these swing lows and swing highs are not all swing lows and swing highs are aligned with one line. For example, this has broken above, and if I try to plot this one, there is no proper line. So there will be some cases where you will find price behavior reacting exactly from the trend line, and you can either plot channel or you can plot the trend line. So sometimes channels are very important, where you can see the price moving in a channel and you can have two lines exactly parallel to each other, and price action will be reacting harmonically inside that channel. Otherwise, you can at least draw one single line that will work as a trend line. For example, if market is falling, the trend line has to be drawn on the top, not at the bottom. So this will be your downtrend line. This will not be your downtrend line. All right. So when market is falling, the line should be drawn above the swing highs. If market is rising, then line should be drawn below the swing lows. This can be called a trend line in this case if market was rising. So this is how trend lines and channels are drawn, and you can look at the support and resistance. Now there is another question. What happens when there is such kind of scenario? Market looks like it is falling in a channel, but the swing lows and swing highs are not reacting precisely from any lines. Sorry, I've drawn this by mistake. So I was intending to draw this channel. So if we look at this channel, they are not the swing lows and swing highs are not precisely reacting from lines. So what we can do? Still we have to find support and resistance based on this some sort of falling channel. So we can use another tool which is named as Bollinger Band indicator. I will teach you later about Bollinger Band indicator in a separate class when I'll start teaching indicators. But today I'm talking about just one specific use of Bollinger Band, which is all about finding support and resistance, just like we find support and resistance by drawing a channel. So here I am replacing the channel by Bollinger Band because channel isn't working. So these are the parameters. We have not to change anything in the parameters. Visualization, if I don't change this, it will be visible on the all time frame. We are talking specifically about the scenario on daily time frame. So let's keep it specific to the daily time frame. And Bollinger Band should be visible. It's not looking, so I should right click and go to the indicator list, and I need to check what happened. Oh, I placed it on the weekly by mistake. I should keep it on the daily. All right, okay. So now the Bollinger Band will appear. It is trying to appear, but sometimes it doesn't appear. For example, look at this line. This is Bollinger Band. It's not appearing. So what you can do, you can simply go to any other time frame and come back to this time frame, and the indicator will appear. For example, I go to monthly and then come back here. Now this band has appeared. And in this case, you will see that the swing lows and swing highs were not aligned to the lines of the channel, but they are pretty aligned with the Bollinger bands. For example, see, price came to the upper band, came very near to the upper band, came very near to the upper band and reacted. Same thing happened here, here, here. And price came along with the band. And now again it is going to touch the band. So this area can be treated as a support. So this is how you can try to find out resistance and support on the chart. So that's all about the support and resistance. I will see you in the next video. Thank you for watching.